Early strength in the grain markets turned into just modest gains on the close for corn and soybeans, while wheat futures dropped to the downside of unchanged in a disappointing session. But lean hog futures posted a third consecutive round of gains, while the cattle complex shot to the upside to restart rallies.
Live from Margaritaville via Farm Journal Studios, this is AgriTalk. This afternoon, we'll chat with Clark Neighbors from BIS Commodities. Directly following the news, Matt Bennett from agmarket.net. I'm handsome newsman Davis Michelson. Now, welcome the host of AgriTalk, Chip Flory.
Dude, don't tell me you're mixing tequila and wheatgrass juice again. It did not work the last time. It's not going to be good this time either.
Uh-huh. Well, you know me. I'll try anything twice, maybe three times. Maybe three times. Margaritaville, It almost seems like wheat kind of took the day off to put their feet in the sand today. Come on, wheat. Come on, guys. No?
Got it. Yeah, toes in the sand, that kind of a thing happening. Yeah, it was a disappointing day in the wheat trade. I don't think there's any question about it. And the way that the whole grain complex was trying to work to the upside around mid-morning, it felt pretty good. I was really impressed by the fact that soybean futures were adding on to the gains that we saw yesterday. Now, beans still closed with some decent gains, but they pulled back and closed kind of mid-range. So that's the reason that I'm disappointed there. Corn just slightly higher. I don't like how it sets us up for the last 3 days of the week, I guess is the bottom line here. And the markets, I felt like, were proving something, and all of a sudden it's done. So, hey, the storm just rolled through.
What?
Yeah.
Gosh, it seems like it rains awful easy up there. I heard somebody talking about that the other day. Yeah.
It does, dude. Look at what's happening in eastern Iowa. We've got some storms that stretch. Geez, that's all the way over to the Fort Dodge area, up into northeast Iowa, and then right down the I-380 corridor and along I-80. I mean, this has turned into a whole lot more for rain than what I thought it was going to at this time of the day. We've still got a chance for some storms again tonight, unless, of course, this takes all the energy out of the system, which could very well be happening. So, all right.
I just heard a thunder over here, too, so those Iowa storms move fast.
They do.
Wow. Clear over in South Bend.
Big Apple Joe checking in with some thunder. That might even be across the border from you that you're hearing up there. Wow. Looking forward to the conversation with Clark Neighbors coming up here in just a little bit. Matt Bennett after the news. So let's go ahead and get started, Davis.
December soft red winter wheat futures opened steady and traded through resistance at 575 before setting back to post a low-range close. December SRW futures posted a second consecutive inside trading day as the market consolidates just under resistance at 575. Spring wheat futures anchored the wheat market today after USDA rated the crop 12% excellent as of July 21st. That's a 2-point increase from the previous week. USDA did rate 5% of that crop poor to very poor. That's up 2 points from the previous week. Traders are watching for reports from the Wheat Quality Council's annual Hard Red Spring Wheat Tour through North Dakota. That tour started this morning. December HRW wheat futures today 4 3/4 lower at 583 1/4. December SRW wheat down 5 1/4 to 567 3/4. September spring wheat closed at 615 1/2, down 7 1/4 cents. Chip.
It's going to be interesting to see what everybody finds on the tour through North Dakota. We'll get the official group guesstimate of the North Dakota spring wheat crop on Thursday.
USDA says 67% of the corn crop is rated good to excellent, down 1 point from the previous week. 10% rated poor to very poor. That's up 1 point on the week. USDA this morning also reported the sale of 200,000 metric tons of U.S. corn for delivery to unknown destinations in the new crop marketing year. But that demand news failed to provide much support for prices. Corn traded to solid mid-morning gains on spillover support from the rally in soybeans, then pulled back to a mid-range close. Still, Chip, December corn futures posted the highest close since July 5th.
Yeah.
September corn futures 2.25 cents higher at 402.5. December corn up 2.25 to 417.25. March corn futures closed at 431.25. That's up 2 cents today.
Yeah, so off the highs, but don't be too disappointed by the highest closing, since early this month. That's not a terrible price performance.
No, not at all. Well, the soybean crop ratings were unchanged in the weekend of July 21, with 68% good to excellent and 8% poor to very poor. Soybean meal and bean oil traded higher at mid-morning, helping bean futures rally to the highs of the day. November beans opened lower, rallied through resistance at 10.75, and then pulled back to post a mid-range close. The lost momentum in the bean rally happened as meal and bean oil prices turned lower on the day. August beans were 1/4 penny lower at 11.17.5. September beans up 7 cents to 10.71 3/4. November beans closed at 10.75.5, up 6 3/4 cents. Chip.
August bean meal on the day down 90 cents, and August soybean oil down 34 points. So that did pull bean prices to the downside.
Live cattle futures closed higher for a third consecutive session, with yesterday's move above one-time resistance at 182.50, triggering some short covering. August live cattle today 237.5 higher nonetheless at 186.30. August feeders 235 higher at 258.75. On the snout side, August lean hogs today $1.27 higher at 93.65. Yeah. And oops, I did it again. December cotton. Let's pick that up today. 114 points lower, 69.48. Chip.
Yeah, big move to the upside in the livestock trade. It was a good day over there, no doubt about it. All right, let's bring in Matt Bennett, agmarket.net. Hey, Matt, how you doing?
I'm doing good.
Good, buddy. I'm a little disappointed
Can you hear me okay?
in the way that
Okay.
I'm a little disappointed with the way that corn traded today. How about you? What are you thinking?
Yeah, I mean, obviously we settled nickel off the highs. That's not really what you want to see. Clearly, yesterday you came in and posted a better performance than I think what anybody would have guessed. But then you come in today and it seemed like you resumed that follow through buying. You just kind of ran out of steam. I think clearly there's some different forecasts as to what the weather's going to do. But overall, I still feel like these funds are fairly committed to their positions. We shed a few longs last week, but I don't think you're going to see them run for the exits anytime soon.
Yeah, it's going to take more than what is happening out there right now to get them to do that. What do you want to see out of this corn market? What would make you feel better about a rally for the second half of the growing season?
Yeah, I think you've got to get some demand news nobody's expecting, first of all. Probably going to need some weather that kind of pops up and, provides a little more stress than what most people are expecting. I mean, I don't know. Whenever you look at the forecast right now, it looks like the central and eastern corn belt looks almost ideal, as far as what the forecasts look like over the next 2 weeks. Western corn belt has had ample rainfall, but we know they're going to need follow-up rainfall. Maybe if you get hot and dry, Chip, maybe you'll be able to get something going.
Yep, very good. Very good. Matt, thanks, buddy. I appreciate you. We will talk to you later.
Absolutely,
right.
bud.
Yep, that's Matt Bennett, agmarket.net. Coming up next, we are going to get into a conversation with Clark Neighbors, BIS Commodities down in Cedar Rapids, Iowa. That's coming up next here on AgriTalk.
We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
Welcome back to AgriTalk. I'm Chip. Glad that you're with us on this Tuesday afternoon, July 23rd. Late August already, Davis.
I was thinking I might put that message there on my answering machine here at home.
What's this?
We've cleared the schedule for you. Tell us what's on your mind. Beep. I'd be curious what I get out of that. You never know.
I'll bet you could get some sort of a side hustle going. Recording outgoing messages for people.
That's not bad.
My message is, in the morning, you're coffeeed up.
It is not.
Hey!
Stop
We're
it.
here all day.
Stop it. Stop it. All right, let's get into the conversation with Clark Neighbors, BIS Commodities. Clark, welcome back to AgriTalk, my friend. It's great to talk with you again.
Good to hear from you, Chip. Kind of sounds like it's goofy there. So,
Yeah. Yep. Well, when you've got the markets kind of performing the way that they are, and this the weather doing what it's doing, it's kind of hard not to get a little goofy sometimes, Clark.
That's correct. We're not used to green ink on the screens anymore, are we? So
That's right. Just give me your overall impression of the way. Start with the corn market, of the way that the corn market has been trading. What's it set itself up for?
Well, I think in general, the market's absorbing the supply story very well. As we all know, the funds are very short, and that's always kind of a factor to keep in mind, especially in the last couple days when you see what looks to be some sort of short covering type pop or rally, if you will. I heard you talking to the previous in the previous segment about disappointing close today, and I think part of that is you're just seeing hedge pressure come into the marketplace as the day wore on. I mean, we saw a lot more selling in the country today than yesterday. Yesterday's gains hung in there really well. Today, not so much. But bigger picture, big story, markets every day becoming a little more comfortable with the supply story. We're not to the finish line by any means, but I think the market's very comfortable with the potential. And, we just need to see some demand start to creep in, which I think we'll see. We should start seeing some routine business for new crop, both corn and beans starting to show up on the sheets on a daily basis. But yeah, it's setting up to me, and you've been doing this a long time, where we may end up going through one of these segments or periods for a few months or a couple, 3 years where the market's very choppy. Margins aren't real big in the country. We tend to go through those phases, and it feels like we may be entering one of those or have entered one of those type of segments in the last few months. We put something together this morning I was looking at, and I think I sent this to you, showing D's corn over the last 10 years, but taking out the high years and looking at stocks to use ratios that are similar to this upcoming year. And that's in that 2014 to 2019 time frame.
Right.
And not to get lost in all the numbers, but that was a time frame where the market was fairly flat. Stocks to use ratios were in that window between 12.5% and 15% or so. This year we're expected to be at right now pegged at 14% for the new crop. We put lows in December corn, or seasonal lows in December corn, in basically all those years other than one, between the last day of August and the last day of September.
Yeah.
So if we are to follow that pattern, you seem to take out the last of the weather premium in the markets, usually about mid-August for what it's worth. So we'll see. The one year that was kind of an offshoot of that was 2020, when the derecho hit and it got dry and the markets took off. But you throw 2020 out, between 2014 and 2019, that was pretty constant and a kind of a choppy type trade. It just feels like we're entering in that type of environment again. But again, those lows kind of came in September. You had big carries in the markets those years. It's starting to kind of put that type of storyline together again this year.
Yeah. Man, it's amazing how consistent it was. I guess I didn't really realize that, but August 30 to September 30, I mean, in a year like we're into right now, that's what you ought to be thinking about for when, and I suppose it makes sense. We're putting away the concerns about the supply side of the market. We know that a crop is made. We know that we're going to be looking at this this hefty stocks to use ratio, and now it's time to go find some demand with lower prices. I think that's the story, isn't it?
Absolutely. The job of the market is to go to a value to find further demand. I mean, our corn demand's solid. It really is.
Yeah,
and we're off to a decent start with new crop sales. Now, beans are a different story. We'll see how that plays out as we're competitive now again in the world market as the Brazilian supply starts to dwindle as we enter harvest. But we just need to go to values to whatever that might be to find that demand function. So,
yep. So, Clark, I cannot argue your thoughts on the idea that we're going to be entering a period of mostly sideways but choppy price action, and it's going to be here's your chance to lock in break even or maybe a little bit better. Don't miss it. Versus plenty of time of searching for demand, which means lower prices. How does that change how you're going to approach marketing over during that time period, whether it lasts a year, 2 years, 4 years? What do you do differently?
Well, I think short term, even though it's pretty limited, you got to look at the moves in the last couple of days and typically reward the market a little bit. And I think we saw that happen today, both in old crop and new crop, and hope that there's, further strength or some further type of correction or short covering rally, whatever it may be, and use that to get sales a little more in line, at least as we approach new crop. Because once the new crop begins, or let's assume you have those seasonal lows in September, what you got locked in at that point, then the game begins where you wait for better basis and look at carries in the market. And I think we'll see the spreads widen to give that opportunity for trying to capture carry and better basis levels down the road as demand feeds itself into the market, hopefully as the year wears on. But there's no magic formula, but and we can talk about this in the second segment, but there's quite a bit of old crop to move yet too. And that's the other part of the story that concerns me going into August and September is the impact that might have in certain markets, both from a basis and a flat price standpoint as we approach harvest.
Yeah. Yep. The attitude that I always had in times when we did flatten out a market and we did go sideways, choppy pattern for a period of time, it might seem a little natural to just kind of kick back and relax and say, okay, the market's not going sharply higher, it's not going sharply lower. We know that. I'm going to hang out and we're just going to do our marketing. But really what it demands is that you double down. You become even more active in your marketing, and you've got to build a price rather than just accepting a price or a break even when the break even is offered. You've got to be more active, don't you?
Yeah, it takes discipline. It's easier said than done. And maybe it's just pattern sales or whatever it might be. But I think we're entering one of those periods. Obviously, use options as a way to capture if something changes dramatically. But you've seen this many, many times over the years. We go through those segments till something changes dramatically. You kind of tend to go through these periods. So we'll see if that plays out. But the ingredients are sure there right now, it seems.
There's been the rare occasion where it was not a short crop in the U.S. that triggered the turnaround. I mean, I'm thinking about the year that we lost like 450 million bushels of corn out of Argentina and Brazil, and all the demand come rolling back into the U.S. from China. That was a demand-led rally, even though we were having a good crop. That's awesome when it happens. The problem is it doesn't happen all that often. All right, man, time is flying. We're talking with Clark Neighbors, BIS Commodities. When we come back, we got to talk about that old crop marketing, Clark. and also just the structure of the corn and soybean markets. What signals are they sending?
30.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 4 3/4 lower at 5.83 1/4. December SRW wheat down 5 1/4 cents to 5.67 3/4. September corn futures were 2 1/4 cents higher at 4.02 1/2. December corn up 2 1/4 of its own, 4.17 1/4 on the close. August soybeans 1/4 of 1 penny lower, 11.17 1/2. Novi beans closed at 10.75 1/2, and that one's up 6 3/4 cents. December cotton today 114 points lower, 69.48. On your livestocks, August fat cattle $2.37 1/2 higher at 186.30. August feeders $2.35 higher, 258.75. And August lean hog futures today at $1.27 1/2 higher at 93.65. Get more. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
Welcome back to AgriTalk. I'm your host, Chip Flory. Hey, heads up here in eastern Iowa. We just had one of these cells go to a severe thunderstorm warning. It's around the Anamosa area in Jones County, the great Jones County, I should say. And so it's around the Anamosa area, just north of Tipton.
Wow.
So just
still rolling up there, huh?
Yeah, absolutely. So just east of Clark Neighbors, who is at BIS Commodities. Clark, these storms, man, it sure rains easy, doesn't it?
It sure does. I just happened to bring up the radar when you mentioned that. I'm like, wow, where did that all come from?
Yeah. Yeah, it's been rolling up here for a little while north of Waterloo. And, I mean, it's it's not like we picked up an inch of rain or anything, but I know that we picked up plenty to spoil some plans for guys that wanted to get out and get some things done because this was a little unexpected. Okay. You mentioned the old crop marketings at the near the end of the last segment there, Clark. What are your thoughts there? What should guys be thinking about?
Well, I mean, to start the thought process, you got to go back and look at the stocks report from a few weeks ago. And basically on-farm bushels on June 1st were 2.8 billion bushels, and the 3-year average is 1.9. That's on the corn. And beans are 431 versus 271 on the 3-year average. So the numbers are out there, according to the USDA. And in talking to commercial accounts I have, that seems to be the case. I know there's been a lot of conversation, especially in Iowa, Minnesota, Nebraska over the last 60 days or so because of the strong cash basis in the Western Corn Belt. Are the bushels really there? And I think, the numbers we're looking at from the USDA are more, Midwest wide versus pockets and regions. But I kind of look at it this way. Your ethanol margins are strong. Mm-hmm. Those pockets in Iowa and Minnesota may be a little lighter on stocks. Mm-hmm. But I think the key thing to keep in mind is the grain industry is really not capable of moving supply from a surplus area to a deficit area in that part of the world. That's more of a rail origination area, not a rail destination area. So it's hard to fill in the blanks there short term. And I think that's part of the reason you're having, these basis levels in the Western Corn Belt at 50 over at the same time an ethanol plant in Ohio or Indiana's 20 or 30 under. You got an 80 cent differential. So that's very interesting.
Well, unless that feed mill out west really needs something, because there's been times where there's been bases pushed $1.25, $1.50 over.
Correct.
When they really need it. Yeah.
Yeah, you get down in the plains and in some of the feed areas. Yeah, I mean, it's been trading at values you just mentioned, and that area is still going to be, tight until the combines roll. They could, in theory, I guess, feed some wheat in some of those pockets, but that typically doesn't fill a void, and it's late enough in the year you may not see some of that. Now, we also look at some stuff, and it seems like the producer is about 10% behind on both old crop sales and new crop sales for this time of year in comparison to normal. So that ties in with that. So the bottom line, Chip, is a day like today where it looked like you saw some selling by the producer, hedge pressure, if you will. Does that play into this August, September timeframe? When we were talking earlier, those lows that came in late August and and through September, I think it was in 2015 and 2016, we had a similar environment to this year, and the lows came in at the end of August. And a lot of that pressure at that time came from old crop moving right before the combines started to roll. So
to harvest.
It feels like we could get into that situation. I hope we don't, but that tends to put a lot of pressure in the early part of harvest too. And having that basis come out of harvest maybe as quickly as a person would like to see in that post-harvest time frame, that could limit that. We'll see.
I think what you're talking about, Clark, is the recipe that gives you those 2 days up, 2 days down, 2 days up, 2 days down. And it just turns into a choppy kind of go nowhere market that you got to take advantage of if it offers you any kind of a rally. And I think that might be what we're getting into. I don't know.
Yeah, and if you're in the Western Corn Belt and you still have these strong premiums, it's not paying you to be patient. Let's put it that way. You have about a 50-cent premium today versus Getzlot harvest. I mean, who knows how that'll play out as we approach harvest. But, and it's interesting too, on a similar but different note, we have all this premium on the corn basis in the Western Corn Belt, and you remember this, Chip, 20 years ago, why did all the ethanol plants go in that part of the world? Because it was cheapest corn in the Midwest, right?
Yep.
Today it's the most expensive. But on the other side of the coin, the Eastern Corn Belt is where the premiums are into the bean crusher. So you have like a 50 to 80 cent premium in the Eastern market on bean premiums versus the West. So corn and beans are just backwards from each other, and that's very interesting in many different ways. A lot of that has to do with how the crush is to the east and demand for meal out east. Again, crush margins are good on soybeans too. So that's what's feeding that eastern market on beans.
Yeah. Okay. All right. Good discussion there. Talk to me about the structure of the futures markets and the carry that we've got in corn. When we're thinking about new crop marketing, how does that come into play in your thoughts?
Well, again, the market's every day getting more comfortable with the supply story. And as the supply story builds, for trend line or higher, which right now I think most people are leaning that way, as you approach harvest, you should see more carry build into those new crop spreads between December and March and July or whatever on the corn, and similar on the beans against the November. Currently, we're at about just shy of 50% of full carry on both corn and beans. And what does that mean? Well, a lot of times you should see 60 to 70% of full carry, so that those carries should build. I always like using Labor Day as a time frame to see where that carry structure is and maybe take advantage of that carry in the market at that time if a person has bushels locked in. But I think to answer your question, the structure of the market is as such where it's building in the supply. Again, maybe we take away some of this weather premium in August to have the market dip back a little more as you approach harvest. And then, as we talked about earlier, go to a value where demand kicks in. And again, corn's off to a decent start on new crop exports. I think it's a given the ethanol story ought to be solid. We're lagging in beans right now as far as export demand for new crop. We are currently on the books about 71 million bushels a week ago. A year ago it was 181 million bushels. China currently is only about 20% of their normal package for fall and early winter. We should start seeing some announcements on your routine business almost on a daily basis to pick things back up. I think the market's looking for China to maybe buy 10 to 15 million million metric ton of beans over the next 3 or 4 months. But that's the normal thing. That's the normal routine business. Will it be above and beyond that with the big Brazilian and Argentine crop coming out? We're working through those supplies. So we are competitive in the world market right now, which is encouraging. So we'll see if we start seeing some demand pick up on that sector.
Okay. All right. We've only got a couple of minutes left, so I want to hop over. I know that you keep an eye on what's going on in the livestock markets. Man, that was a nice move in the cattle complex today, wasn't it?
Yeah, and a lot of that came in the last 10 or 15 minutes. I wish I could put my finger on a pulse of what happened in that last 15 minutes, if there was some cash trade in the country or whatever. I mean, midday boxes were kind of quiet, but I think it's more momentum. And if you look at a cattle chart and a feeder cattle chart, we've been very choppy here of late. They're obviously still in a long-term bullish cattle trade, but it's starting to hesitate. The on-feed numbers the other day, I think, show, short-term supply is okay, but the placement numbers were a little positive longer term. The other side of the coin, though, is weights are, 25, 30 pounds above normal. It's to an economic positive for cattle feeders to build those weights right now. So the tonnage structure is still there, but hopefully this cattle market continues to hold these recent gains, and hopefully we see the cash market build as you kind of get into what they call the dog days of summers right now on the demand side. But I think the demand is held in there better than most of us thought so far, considering the price structure.
Yeah, there's no doubt. No doubt. But as long as you're up here, you maybe look at getting something to protect the downside risk in place. Clark, it's always fun to talk with you, man. Thank you so much for making time. Watch out for the storms down there, and we'll talk to you later.
Sure will. Thank you, Chip. Appreciate it.
All right. You bet. Clark, Neighbors, BIS Commodities out of Cedar Rapids, Iowa. Davis and I will be right back to wrap up Tuesday's AgriTalk.
You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG. Welcome back to AgriTalk, everyone. Your pal Davis Michelson here. Chip Flory joins as well. Good conversation with Clark Neighbors from BIS Commodities.
Yep.
Matt Bennett from agmarket.net was just a little bit focused on the weather. It's a mixed bag over there. I remember talking to him earlier on, and he was like, I made good progress, and then it started raining, and I had to quit, and then it rained like every 3 days and couldn't get caught back up. To me, that sounds like a recipe for pretty decent soil moisture. The West, maybe not so much, Chip?
Yeah, they're in pretty good shape right now, and maybe things are I hesitate to say that things are drying out even in the Western Belt. Now, if you want to talk about where there are some real crop problems because of stress, you're talking about the Southeast U.S., down along the Gulf, the Carolinas, Alabama, into Louisiana, Mississippi. They're looking at some dry conditions down there that have definitely taken the top end off the corn. There's still time to save that bean crop in those areas, but they're going to need some rain, and I shouldn't say they're going to need some rain. They've needed rain for a while. If I look at the corn condition ratings and you look at North Carolina, 31% very poor, 35% poor.
Wow.
Yeah, I'm talking 2/3 of the crop is
That's
poor to
rough.
very poor. Okay? Tennessee, 11% very poor, 11% poor. So there's some real issues in areas outside of the Corn Belt. Now, I know you can basically just kind of zero out some of those states, and they don't have a big impact on the national average yield, but nonetheless, something that we want to watch. Now, one other state that I wanted to point out in the corn and soybean condition ratings is Minnesota. You got 3% very poor, 9% poor, 30% fair, so you're looking at 58% of the crop in good to excellent condition. But boy, that 12% of the crop that is in poor to very poor condition is going to put a cap on the Minnesota bean yield potential. You also got 12%, corn yield potential. You also got 12% of the bean crop rated in very poor to poor condition, and 57% of the bean crop in Minnesota is in good to excellent condition. So it's not perfect. It's not perfect out there everywhere, but it's pretty doggone good in the I states.
Well, and as you're talking about Kentucky and some of the southeastern production regions, it does look like there are some streaks of showers moving across that area. If it's anything like what you're getting, just one isn't going to be enough.
No,
for the southeast, is it?
No. I mean, they're to the point where it's going to take time to fix the drought that they are dealing with. No question about it.
Yep. Talk to me about. Clark said something interesting. The grain industry is not real good at moving corn from one place to the other within the country.
Well,
that's new to me. That's surprising.
Well, I think he was talking more about some of those areas in the Western Corn Belt that are shorter on supply for the ethanol belt, ethanol production areas. They're really good at offloading corn from semis, but if you're going to be bringing it in on rail from the Eastern Corn Belt, that's something that's a bit different for those guys to deal with. So it's not now they're really good at taking product away from the ethanol plants by rail, but bringing corn in by rail is something that's a little bit trickier for them to handle. They're used, and the other thing is, he's exactly right. When they've got surplus corn, that's an area where they load it on rail to get it out of there. That's pretty simple to do. But to bring it in on rail and make it available for the ethanol plants, that's more difficult to do. I hadn't given that much thought either, to be honest with you. But here we are. I'm one of those people that thinks the cash market is a force of nature, where it can do things that it blows you away. It's amazing what that cash market, whether it's corn or soybeans or wheat or cattle, it's pretty amazing what it can do and the things that it can factor in. But that sometimes you run into the uniqueness of moving product around the country that creates some issues. Yeah,
absolutely.
I thought it was very interesting.
Here, let's segue right into the cash. Clark Neighbors would like to see some strength, a little starch in the cash cattle to support what we're seeing in the rest of the cattle complex in the futures here. I'm looking at the October 186.12.5. In order to maintain that, Clark seems to think we need a little strength in the cash market. Fair?
Well, the cash market's been trading into premium to futures. We talked Friday with Scott Varlig from KKV and talked about the issues that big premium basis creates when you're trying to do some risk management strategies. You look at a $10 premium in the cash, and you look at what's happening in futures, and there's not a lot of incentive to pull the trigger on some hedges when you've got that kind of a makeup.
Yeah.
All right, July 23rd. Yes, we've got it. This is the 6
Awesome.
to 10 day outlook for July 29th through August 2nd. Above normal temperatures expected over the entire Corn Belt. The highest odds for above normal temperatures, the western 3/4 of Nebraska and Kansas and out into Colorado and Wyoming. But the whole Corn Belt is looking at above normal temperatures. Above normal precipitation expected from eastern Minnesota, eastern Iowa, all of Illinois, and points to the east of that. Near normal to below normal precipitation in most of Nebraska and Kansas for that period, July 29 to August 2nd. All right, thank you so much for listening today. We got a farmer forum here on AgriTalk tomorrow morning.